The housing market right now, it's a complete paradox. Mortgage applications have hit rock bottom, interest rates are way up, and yet home prices just will not crash. The whole thing feels completely frozen. But what if that freeze is actually creating this huge hidden opportunity? And that right there is the central mystery we're going to unpack. Warren Buffett, probably the most famous, most successful long-term investor on the planet, just made a massive bet on housing. And get this, he's not betting on a crash. He's betting on a boom in one very specific part of the market. The big question is, why? Yeah, and we're not talking chump change here. We're talking about an $800 million investment into some of the biggest home builders in America. So to figure this out, we have to look past all those scary headlines about a crash and see what's really going on under the surface. Okay, so the first big piece of the puzzle is this thing economists are calling the Great Homeowner Lock-in. This is the real reason the market is frozen solid, and it all boils down to one very simple, very powerful comparison. Just look at this. It tells you everything you need to know. Just a couple of years back, millions of people locked in these incredible mortgage rates, right around 3%. But if you want a new mortgage today, you're looking at something closer to 7%. I mean, that gap, it's huge. It changes everything. And that difference creates what we call the lock-in effect. It's kind of like golden handcuffs, right? If you've got a sweet 3% mortgage, why on earth would you sell your house just to go buy another one with a 7% mortgage? Your monthly payment would just explode. So you're pretty much financially trapped or locked in to the house you already have. Now, this whole lock-in thing, it doesn't just affect one homeowner here and there. No, it has this massive and honestly kind of shocking ripple effect on the entire market. It's caused the supply of homes for sale to basically vanish. So what happens when nobody wants to sell? Well, the supply of used homes, existing homes for sale, it's just completely dried up. It's like a reservoir in the middle of a drought. People still want to buy, but there's almost nothing new flowing in. It is no exaggeration to say that in a lot of places, this inventory has nearly dropped to zero. And this chart, it shows the problem perfectly. Look at that imbalance. On one hand, you've got this tiny, tiny sliver of available homes. But on the other hand, you still have all this demand from people who need a place to live, folks moving for work, starting families, just trying to buy their first home. So that leads to the big question, right? The $800 million question in Buffett's case. If you can't buy an existing home because there just aren't any for sale, where does all that pent-up demand go? And this is where we get to the heart of Buffett's big bet. It's actually surprisingly simple once you see how all the pieces fit together. The lock-in, the supply crisis, the steady demand, it all points to one place. Okay, so think of it like a domino effect. It's a simple chain reaction. Step 1, existing homeowners are locked in so they don't sell. Step 2, because of that, the supply of used homes pretty much disappears. Step 3, this forces every single buyer into the only part of the market that has anything to sell. And Step 4, the new home builders end up capturing pretty much the entire market. This right here, this quote just sums it up perfectly. See, normally home builders are competing against millions of used homes. But today, in a market with basically no sellers, the builders become the market. They've got a captive audience. And that's the genius insight behind Buffett's big move. But wait, there's actually another layer here that makes this bet so smart. And it explains why prices aren't crashing. Real estate, it's what you call a hard asset. When inflation is high, the cost to build a new house, we're talking lumber, concrete, labor, everything, it skyrockets. And that high replacement cost basically creates a price floor under the whole market, protecting the value of the very homes these builders are selling. All right, let's pull all this together for the final verdict. I know everyone's got 2008 in the back of their minds, but the truth is, today's market is a totally different animal. The dynamics are just not the same. Just look at this table. It makes the difference so clear. Back in 2008, the problem was a massive glut of homes, way too much supply. The core issue was too many sellers. Today, it's the complete opposite. We have a historic shortage of homes. The problem isn't too many sellers, it's that there are no sellers. So, what does this all mean for you? Well, first off, if you're waiting for a 2008-style crash, you're probably going to be waiting a long time. The conditions just aren't there. For anyone looking to buy, it means you might have to start looking at new construction. And for investors, it really highlights the value of rental properties because that scarcity isn't going away anytime soon.
And that kind of leaves us with one last big question to think about. For decades, the American dream was buying that perfect house, maybe one with a little bit of history. But now, in this weird, locked-in market, if the only house you can really buy is one that hasn't even been built yet, does that mean building is the new American dream?